Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Devina Khanna. First up, the headlines. Markets pair opening gains, Nifty and Sensex trade with cuts, India VIX inches up. Open interest surges on Oil India, Diwan Housing as traders take fresh positions in respective stock futures. Tata Motors falls as much as 6% after Jaguar Land Rover says it'll keep its UK plant shut for 2 weeks. And the IMF cuts global growth forecast as trade wars take a toll, also cuts India's growth projections for 2019 by 10 basis points. Also, let's take a look at what's been happening in the futures and options trends and what's been indicative there. So, we'll start off with the indices first, which seem to have moved into the red. So, for the Nifty, a quick look at what the futures are doing. You've got a premium of about 22 odd point. That's collapsed from the 31 point premium that we were seeing by close yesterday. 10,330 is where we are trading at. The October futures are trading at 10,355. Remember, yesterday this premium had actually seen an expanse. Coming to the bank Nifty and the open interest as well. That's a Nifty open interest for you. 20.34 million shares been traded. On the bank Nifty, 1.53 million shares have been traded. That's an open interest uptick of about 5.83%. So the bank Nifty itself is down closer to about 0.1% right now. Taking a look at what's happening in the options space as well. Remember, you are seeing the maximum amount of build-up in terms of the concentration on the puts being at 10,000. For calls, the maximum concentration still lies somewhere closer to 10,800, 10,700. But for today's session, the change that you're seeing, 10,600 has the maximum amount of change on the upside at 10,600, as well as 10,000, which is somewhat placing its bottom out there. So puts being active in today's session at 10,000 and calls at 10,600. Aside from that, let's quickly take a look at what's been happening in India VIX. Yesterday, remember, we actually saw the market surpass 2021. It's now trading closer to 20.13, which is down just marginally by about 0.1%. Individual stocks, and quickly looking at where there is more accumulation, where there are fresh shots being built in, few stocks to watch out for. So we were talking about Diwan Housing Finance, and that's seen a massive open interest change of about 12.5%. The stock's moved up about 1.4%. Just Dial is the other one that is seeing an uptick of about 14% in open interest, but the stock is losing. So you've got some short build up in Just Dial. Tata Elxsi again down 4% after yesterday's 11% cut. So yesterday there were shorts in the system. Today again to the tune of about 11% odd. There are some shorts building up in the system. Reliance Capital again sees an uptick closer about 1.5%. Open interest change on the upside there for Reliance Capital. The stock has actually moved up from the lows of the day. The other one is Yes Bank. The stock actually sees some shedding in the session today. So some shorts getting covered. The stock's moved up 4.5% odd. Wockhardt is the other one that sees some amount of shedding because the stock's about 1.5% odd in intraday trade. That's the wrap-up for you as to how we are positioned for trade this morning on the futures of the Nifty and the Bank Nifty and specific stocks. But quickly, let's take a look at a few other stocks that should be in focus. And we've spoken about Tata Motors, and that stock's going to be in focus all through today as the stock has seen a heavy knock of closer to about 6 odd percent, now down a bit to 4.5%. Its September sales numbers, JLR September sales numbers came down 12.3% at 57,114 units. Temporary halt at Solihull. They're going to shut down the plant for about 2 weeks in October owing to weaker demand. So that's putting some amount of pressure there on Tata Motors. Reliance Capital also is the other one that you're going to be watching out for. The stock down in the session in the morning. It opened lower by about 3.5%. It's moved up now, so it's gained ground by an interesting amount of 2 odd percent. Care Ratings has gone ahead and downgraded its long-term debt ratings to Care AA. So that stock fluctuating between gains and losses. And lastly, Vedanta is the one stock that you need to keep an eye out for. Yesterday, you saw the stock shedding almost 11% in terms of the pricing activity, heavy shorts in the system. Today, the stock has rebounded and is up about 1.23%, and there is a positive change in the open interest as well. Let me quickly welcome our F&O experts on the show. We've got with us Amit Shah of Bob Caps, he is in the studios with us, and Nirav Chheda of Nirmal Securities is also joining us on the show. Gentlemen, thanks very much for taking out the time. I want to quickly first take a look at what's been happening on the index, Amit, and whether or not, at this juncture, is it feasible to take any sort of positions?
See, firstly, the volatility has completely taken the market into the loom, right? We have seen 200-day moving average being violated with intense volume and with a great speed in last 4 trading sessions. I'll just take back slightly to the history where Nifty has violated intensely the 200-day moving average, which was during Jan-Feb 2016. If we look at after the violation, what Nifty has done and what are the other broader indices have done. So just during Jan-Feb 2016, Nifty had violated, after violating the 200-day moving average, it had corrected more than 16-17% from the 200-day moving average. Similarly, on mid-cap as well as on small-cap, it was roughly around 21% to 30% respectively.
This time, I think 6% already.
So this time, we are far from the 200-day moving average, considering the low of 10,200, which is roughly around 5.5% odd. So, what we have seen is, and most of the time, during the violation of the 200-day moving average, it is happening with a big gap which is seen on the downside. And similar is the case this time as well. With VIX hovering about 20 and is sustaining above that, definitely this is not a comfort zone. I would anticipate some kind of a pullback, but that will be short-lived. And I believe there can be another leg of correction which can lead Nifty towards 9,700 to 9,500 levels on the lower side. So I would be more cautious. I would deploy more of an option trading strategies at this point of time and would not play the volatility, because this is happening at the either end. Even yesterday we saw Nifty cooling off by 30 odd points on the positive side, but there was not a clear indicator which sector as a whole is going to give support to the overall indices as a whole to support this kind of a pullback. It was just the energy counters which witnessed some kind of a breather after 2 days of intense fall. So I think in day or two we will emerge more clarity whether Nifty is poised for a pullback or whether it is difficult for Nifty to hold about 10,200.
So in light of that, what sort of a strategy should one take?
So I have recommended a 10,500 buying of a call option. I would anticipate some kind of pullback from here on, considering on the hourly chart, Nifty has some more similar taken a double bottom formation around 10,200 mark. That's where it is an important support for the space. Importantly now, on a technical parameter, if we look at the September's low of September 2017, the lows of September and the March 2018 lows, it is hovering near the trend line support of 10,200, 10,150. So that becomes a very important support. The more it sustains about 10,300, that's where I think the index will add more strength and the pullback can be seen towards 10,550, 10,600 on the higher side. So I recommend to go long on 10,500 call option with a strict stop loss around 70 and look for target towards 180 to 200 levels on the higher side.
Okay, got that. So slightly more optimistic view in light of a bounce back, hopeful for a bounce back there. Nirav, you have a similar strategy, and I think yours is identical to Amit's. You're also recommending buying a 10,500 call, but your stop loss is a little bit more aggressive, and your target, he's kept a slightly wider target. You've narrowed it down a bit.
Yeah. See, I too agree that the bounce is very likely to come. See, it's been 5 weeks of the fall from about 11,800 to 10,200. There has been a continuous selling pressure in the market. So most of the indicators are now into the oversold zone. And most importantly, I look at the PCR. You see every strike PCR, the 10,500 strike PCR is actually above 1. And also, very interestingly, the PCR at 10,700 is also above 1. So you look at the options in Nifty. So generally, when a particular index or a stock is below that reference line, the PCR is below 1. But, in this case, it looks like Nifty is going to bounce and bounce very aggressively, probably up till at least 10,600, 650 odd levels. So I too would be suggesting, buying the Nifty 10,500 call. I believe 80 and 70 are good stop losses. So one can hold with those stop losses losses. I believe 117,200 can come, so one can hold with that target, for the 2 to 3 day perspective. Nifty should actually hit 10,600, 650 probably in this week or the start of next week.
Okay, got that. So optimistic view on the index at least coming in from both our experts. Let's before we move on to stocks, here's a reminder: if you have any queries regarding futures in the options market, you can call us now on 022-4540-4141 or write to us on Twitter, Facebook with Ask BQ as the hashtag. All right, what are the trading strategies that we're going to get for our viewers? Amit Shah, for one, let's start off with the first one, which is on ONGC, and he's got a covered put strategy on ONGC. Now, before we go across and tell you what the actual strategy is, let's tell you about more about what the strategy entails. A covered put is a strategy employed when an investor holds a near-term neutral to a slightly bearish stance on the security. This involves selling a put option of the asset in which the investor is willing to simultaneously sell futures of the underlying security. So ONGC, Amit, you want to run us through the strategy and how it will work?
Yeah, so if you see over last week, the stock has violated the 200 as well as the 50-day moving average with intense volume and with a gap down. We saw the entire energy space witnessing intense selling pressure. So it is right now at a death cross where the 50-day moving average is trading below the 200-day moving average, and it has violated the key support of 156. So the more it sustains below 156, and that's my recommended stop loss for this particular strategy. The reason I would deploy a covered put would be that the premiums are slightly on the heavy side. Even if I consider 15% drop on ONGC from the current market price, that is close to 130 strike, that is giving me a decent premium of around 1% odd. So the premiums are trading heavily, which gives me more comfort to write a put. So that gives me a more layoff on the upside in case the stock gives some kind of a pullback. So 156 would be a strict stop loss on the upside, and on the downside I anticipate a target of 138 to 135 levels.
All right. So covered put strategy on ONGC. We'll come to your other strategy in Oriental Bank in a bit, but quickly go across to Nirav for his first strategy, which is on IndusInd Bank. You're going long on the futures, Nirav.
Yeah. For IndusInd Bank, it was in a long-term uptrend and has fallen about 20-25% since from 2000 odd levels. Now there has been a 5-6 week continuous fall, and in the fall, in the last 2 weeks, the volumes have really picked up. There have been much above average volumes on the weekly, and that is why I believe this week will be an inside day candle which the stock will make, and very likely IndusInd Bank will again bounce up towards 1700 at least before again probably falling. But I would like to play that, and there has been seen a lot of short covering in the last 2-3 days. I believe this stock is likely to go up towards 1700, so one can buy at current levels with a stop loss of 1580.
Got that. That's IndusInd Bank futures that Nirav is going long on. Let's take a look at your next strategy on Oriental Bank, Amit.
Yeah, so the stock has been consistently making a lower top, lower bottom formation since the fall from 200 levels on the monthly chart. So I think the stock, even right now, the stock has violated the monthly support of 66 on a sustained basis. From last 2 months, the stock is facing a stiff resistance around those levels on a sustained basis, and it's not crossing those marks. If you look at the volume, it has started picking up, as well as on the open interest side. The rollovers were very much on the weaker side for the September expiry. So I believe the more it sustains below 60 to 64 mark, I think the pressure will come on the downside. I recommend to go long on a put, which is 60 strike price at the mini strike put option. It is trading around 3.25 rupees. Can keep a stop loss around 2.5 and can look for a target towards 5.5 to 6 points on the downside.
All right, so your view is negative on this?
Yes.
All right, so there's a slight change there on the graphic pointer. We're not going long on Oriental Bank futures. We're buying a put option, which is a negative view on the stock price. So that's a 60 strike put at 3 rupees 20 paise. Nirav, your stock idea on Aurobindo Pharma, could you explain why you like the stock?
Yeah. See, in most of the stocks and sectors have actually gone down in this fall, but there's one stock which is really standing out there and hasn't really fallen much is Oro Pharma. The longs continue to stay in this counter, and it continues to witness good support from 730 to 720 odd levels. So one can buy this stock with a stop loss of 730. I believe this stock can again go up towards 790, 800 odd levels. So one can actually stand to gain pretty much in this counter, and this is also a defensive counter, so a lot of money flows into defensives when a lot of large caps and mid caps witness selling pressure.
Okay, so you're going long on Aurobindo Pharma there, keeping a target of 790 with a stop loss of 730 on the stock. Well, time now to take some of those viewer queries that we've been getting in for both our experts. The first query that's coming in on YouTube is from Bala Kumar, who's bought Aurobindo Pharma futures today, and he's asking for the view, and I believe Nirav would have just answered that for you. But nonetheless, he's bought it today, so probably Nirav, can we adjust the targets a bit, or we stick to what you've said?
Yeah, if he's bought it today, more or less he might have bought at the current market price only. So I believe one can hold on with a stop loss of 730. The stock is likely to go up towards 780, 800 odd levels pretty soon. So he can, hold on to longs. Okay,
hold on to longs of Aurobindo Pharma futures. Urmila Salve said she is planning on buying 10,500 calls. Please advise. So we've already taken that up with both our experts. They have actually maintained that you can hold on to the nifty 10,500 call with an upside target of closer to 180 rupees in the premium. On the downside, keeping a stop loss between 70 and 80 rupees as well. So, you can look at going long on the nifty October 500 call. But I'm not the one to advise. Amit, you want to take that? You want to reaffirm your strategy?
Yeah, so I would just, mention here that still the clarity is yet to emerge. It is more of an anticipation right now, which is half-hearted. On the downside, it has good support around 250, 200 mark. So I'm anticipating that Nifty will hold on to that support. And considering what I mentioned on the hourly chart, it has made a double bottom formation. So the more it sustains above 300, 350, I think the strength will add on. So if the trader wants to keep a strict stop loss around 70, 80 odd zone, can definitely take a risk of playing a pullback, because from here, in case if the market sees some pullback, looking at the intensity of the fall from 11,760 odd till almost 10,200, definitely the pullback reach will be much higher on the higher side towards 10,600 or 650 on the higher side. So it's a good risk gamble at this premium, and can trade with a strict stop loss around 70.
Okay, so reaffirming that idea that we discussed earlier on in the show. Zina Satra has 2 lots of Bharti Airtel at 313. She wants to know the view and the stop loss and when she should exit on this one. Nirav, you want to take this one on Bharti Airtel and what can be done here?
Yeah. See, Bharti Airtel has broken some important supports on the way down. One very important support was at 320, and now it is reaching towards its very important support and the previous bottom, which is around 285. So I would suggest that if 285 is broken, then one should be exiting the longs that they've bought. So the stop loss should be around 285 on a closing basis, and even if it is broken on one day on a closing basis, one should be exiting, because this stock can then fall towards 220 to 230 odd levels. So exit below 285.
All right, so keeping a strict stop loss to exit below 285, you can hold on to the position. We've got 2 queries, both on Diwan Housing Finance. One coming in from Vimoj Sukumaran and one from Nuvula Sandeep. Both of them asking for a view on the October expiry and whether they can go ahead and buy the stock.
Well, it's a falling knife, so definitely I would not go against the trend at this point of time. The way intensely the stock has seen beaten up from 600, 650 odd levels, there is no sign of any kind of a pullback or any kind of a breather at any level. So at any intense fall, 2 things are important: either a pullback or a time consolidation, which both these things are failing in this particular counter. So definitely you cannot take a call where the bottom will be for this particular call, but I see the stock can head towards 150 to 170 levels if it continues to sustain below the 240 or 235 mark, and it doesn't show any kind of a pullback from here on. So I would be very cautious in this particular trade and would not recommend to go long on this particular counter.
All right, so at this point, it's a falling knife. Don't want to catch it. Probably wait it out a little bit more before taking any positions in a Diwan Housing Finance. The next one is on Yes Bank. Naseem Ahmad has 100 lots of Yes Bank at a price point of 195. So that probably is a big thumbs up because the stock's currently trading closer to 230. His question is whether he should actually book his profits or wait until expiry. Nirav, what do you recommend?
Yeah. See, I would suggest using a trailing stop loss. The stop loss should be around 215 with 220 being the previous support area, which again it has regained. So, 215 will act as a good support area now for this stock. If it is broken, one should be exiting their long positions. This stock stands to gain at least up till 250 odd levels. The fall from about 400 to about 170, 180 odd levels has seen, good volumes are being built in at the lower end. So a lot of profit booking will then take place around 250 260 odd levels, which is a resistance area. That is where one should be booking profits and keeping a trailing stop loss of 215.
Trailing stop loss of 215, can hope for higher levels, so you can keep your position held on. But a good call on Yes Bank, getting it at a relatively good price of 195. Pawan Kumar has two queries. We've already discussed the 10,500 call. His queries on the 10,400 call and whether he should look at that strike versus the 10,500 strike. And he also says he has one lot of Reliance Capital and he wants a view on that. So Amit, I'll come to you with this one. Does it make sense to probably look at 10,400 also, or you would stick to 10,500 and on Reliance Capital he has one lot?
So see, both these strikes, 10,400 would be more of an at the money, where definitely he will get more opportunity to exit at a faster rate. So both these strike prices are decent enough. It's only about a question of how much one is willing to pay the premium. So considering the IVs are on the higher side, definitely the options are trading on the expensive zone. So that gives me slightly comfort to buy a 10,500 rather than a 10,400. Though the 10,400 would have a better delta, so he can continue to go and hold on to that particular strike price, but keep a strict stop loss around 10,250 on the spot index. Reliance Capital, well, this is again, has been a consistent underperformer and making a steep lower top, lower bottom formation. So I would not recommend any long on this particular trade. In fact, this counter has violated the, long consolidated monthly support of 242. So I would wait. I would rather not trade into such counters. Wait for, in case if it's a compulsive trader for this particular stock, wait for some kind of consolidation and see how it is holding on to 242 levels on the upside. If it doesn't, then definitely there is more room on the downside towards 220, 215 levels.
Got that. And hope that answers your query, Pawan Kumar, on both the queries that you asked us. Edwin Paul has bought Biocon October futures at 674. Should he hold or should he sell? Nirav?
Yeah. See, I believe one should be selling Biocon. It had been in an uptrend, but the indicators are suggesting that it was in a overbought kind of a situation and has corrected since from 700 odd levels. It stands to come down towards 500, 450 odd levels, so one should be exiting Biocon at current levels and again look to buy around 450 odd levels.
Okay. So that stock looks slightly more weaker in terms of structure. 597, bought at a significantly higher price. Revant Kumar wants a view on JSW Steel for the October expiry. Amit?
Yeah, so see, this counter is still in an uptrend. In the entire metal pack, JSW Steel is much of a better performer compared to the other peers. So right now still the stock is in a non-traded zone where it is hovering around its 50-day moving average, which is seen close to 365, 370 odd mark. I would wait for some time to enter into the position. Once it starts hovering above 395, that's where I'll be in a more comfort position to buy this trade. Otherwise, in case if it doesn't hold to 270, 370, 365 mark, then there is a possibility the stock can come towards 345 levels on the lower side.
Okay, that's on JSW Steel. The next query comes in on our Facebook page from Ram Prasad Nuthaki. He wants a view on Tata Steel. So within the metals pack, lots of queries coming in there. Nirav, you want to take Tata Steel?
Yeah. Tata Steel and JSW Steel, he said, were in an uptrend, but I have a certain view on the downside. I believe the metals are the ones now, the metal sector as a whole is going to witness a lot of selling pressure probably in this month, because it has been the only sector which was actually performing well along with the IT sector. So if you look at the broad structure of Tata Steel, from 640, 630 odd levels, it has corrected, and the volumes have been pretty high at the higher levels. It has broken below its important support of 580. Now, until it again regains 580, the selling pressure on the higher level will continue. And I believe it can come down towards 480, 490 odd levels. The RSI also suggests on the weekly chart that, negative bias or probably, selling pressure is very likely to come. So one can be selling at current levels with a stop loss of 580, and you can expect about 480 to come as a target.
Okay. Got that. That's Tata Steel futures for you. Stocks trading at futures trading at about 563. Our last query for the day is coming in on a YouTube channel by the username Braveheart Best. Says the person has about has BPCL at a price of about 262 rupees per share. And what is the view on this one, Amit?
So I would completely recommend to exit this trade at this point of time. It has made a kind of an inverted flag formation on the hourly chart, and which is a negative sign. So I believe, and considering the gap what it had created last 2 trading days before, definitely that shows that the downtrend can further continue. So I would recommend to book a loss, or which is marginal at this point of time, as he has entered into a trade at 262, and avoid this counter till the time the stock sees some kind of a consolidation at the lower levels.
All right, so exit the stock, probably take some losses, marginal losses at that, but the downside potential is still there for the stock, so you don't want to lose much more money on this one. Well, that's all we have in terms of viewer queries that we can address on the show this morning. I really wish to thank Amit as well as Nirav. Thank you so very much for joining in and answering all these queries for our viewers. With that, we come to the end of the show. Thanks a lot for watching.